Step up.
Still not seeing it. There it is.
Number shaking down, scroll. Clock is ticking, you already know. Welcome into the stock market show.
Remember, they have a short week this week, okay?
Oh, yeah. Monday to Friday when the floor's alive.
Check 1, 2, mic check.
James, help you cut that dry.
I think everybody's already on vacation. So.
Charts are jumping, green and red gold. He's steering this ship on the stock market show.
Check 1, 2, mic check.
Where the bulls run wild, the bears lay low.
Mag 7 still side 4 minutes.
Don't buy that open. Let it be for a minute. Coming in to sweep London real quick.
Got your watch list ready, got your game face on. When the spreads get heavy, he keeps you calm. From the open road till the last trade goes, he's calling the shots on the stock market show. Hey,
Wait for me, wait for me.
stock market show.
Now I want to buy it.
The bears lay low from
That was a good sweep right there.
the closing.
Come on, bring it up. Bring up my fucking brokerage. Come on. Oh, no.
Get that trigger pulled on. TraderTheTrigger.com. TraderTheTrigger.com.
See if we can get in here really quick and show you guys where we're at.
TraderTheTrigger.com.
Nope, hold on. Oh, they're really fucking with me now. There we go, there we go. Start pumping. That was a nice fucking sweep right there. Hell, I'm going to switch right up. We're just going to get into it really quick here. Hold on. We'll just turn that off. I wanted to get on the show if I could as quickly as possible. There was a nice little sweep here. I wanted to say to you that there was a sweep at 735.07, just a London sweep. We should be pushing higher into 739.34 and potentially 740.51 before a sweep lower. This being a short week, and this could happen quicker than all day long today. This could be. I have this till 1600, just for the time aspect to it. But I would like to see like that sweep up here, and then the sweep lower with a buy the dip over here to close out the week into the long weekend. Up here and trade 746 and higher. So if you want to just take a quick peek at this. Though there's no requirement to come down here, there's something I do want to say about this sweep lower. Is there is potential to not come back for that for another week or two. Believe it or not. We could seem like everything is honky-dory, like, hey, we're not coming back here, we're going to leave this thing behind, and then we come back in 2 weeks for this. Hope that doesn't happen, but I've got calls on for end of July, so I don't want to see that sweep lower. As a matter of fact, let's talk about some of that, too. Let's take a peek at all this. And right in here. No, was it June 5th, I think? No, that's not it. Right here. Is it this one right here? No, no, it wasn't the 5th, it was the 9th, somewhere down in here. It's like so I ended up getting calls for the June 12th. And I didn't catch this second leg right here. I think I got just this leg on the 12th, June 12th calls. I didn't actually catch any of this up here. But I also down here put on July, end of July calls for all-time highs. These ones right down here. So there's a few things we need to talk about on this too. My calls were doing okay last week. For July, end of July, they looked like absolute dog shit.
S&P 500 extending gains.
Uh,
We're up 0.8.
this past late week, they looked like absolute dog shit. As a matter of fact, I was speaking to some members about it because I had to make a decision if I was going to cut them loose or not. They're still on if you want to know. But I'm angry about this for a bunch of reasons. You know, back in the day when I was a trader, you could put on like a 1, 2, 3 month call, and the sweeping lower wouldn't be too bad, and the highs wouldn't be too high. I probably should have taken the July calls off, and I didn't. Up here, I should have. I got greedy. So they're still on right now, but I'm still angry about it because like I'm timing my bottoms correctly. I'm actually getting monster prints, but I kind of want that. I don't know what it is. I like that long trade on for like a long period of time. I like that it grows over time and stuff like that. So at any rate, I'm still long here to go up into the end of July. Frustrated about this down here.
Space stock.
You could argue that this is the inverse head and shoulders. We're going to give it to the bulls for now to find out. I'm still bullish on into the middle of summer and then a roll lower. I'm actually open to us going vertical into as deep as like October or November. And what else? I kind of saw or see there's an attempted trade that was taking place in here. And we have to monitor this part of this trade. See this sideways action that's right in here. We have some history of this in summertime, but it's been forever. It's been since 1996 and 1998. And I don't know that we can trade either of those outcomes. 97 we didn't do. We just went vertical. But 96 and 98, we did this consolidation move in here. We were unable to launch. And in one scenario, we ended up squeezing violently and then crashing. It was like a violent squeeze. I can show them to you here in a little bit if you want, but we violently squoze, and then we crashed. We went up like 10 or 12% in a few sessions. It was like maybe 7 sessions, 10%. And then we went down 21.2 or something, and then we went vertical into the end of the year. I think that was 98. In 96, we did the sideways move, and instead of squeezing higher, we actually rolled and crashed. But that crash actually turned into like a monster up move into the end of the year. It was like 30 or 50% or something insano. We can go back and look at these things in here, and I can show you this this price action. And it looks like people are trying to run that trade, like that 96 or 98 trade. And the 97 trade, we ended up going just straight vertical. But in all 3 circumstances, it was very volatile price action. And I think that's kind of key for where we are in the market. We're in late stage bubble, and playbooks are run, even if the outcomes are not exactly the same. And it's a hard thing to trade if they are running that playbook right now for that late bubble. They're thinking, yeah, this is 1998 or 1996 or 1997. We're going to run this playbook, and it kind of looks like it to an extent over here. This whole price action in here. So we got to monitor this closely, I guess, and see if this happens or not. I'm not really a fan of that trade to the downside or that summertime crash, and I don't think we're in the same situation at all. I think I'm kind of with Larry Williams in the idea that we're in a new bull market. We keep resetting when we need to. We keep resetting velocity when we need to, and once we do, we're free and clear to go where we need to go. Let's go back over here really quick. Remember that this is a short week. Come on over here. And I'll show you some of these outcomes and where my fear came from in here. And I'll show you where that is too, for that summertime crash, or where that argument is coming from. Because in modern history, we kind of hit that one right there. You can see they came in here trying to hit this thing down a little bit early. Let's watch this for 10:30. Here's the 10 o'clock flows right here. We also get flows like 10 till 10:30. Leave that one right there. And we'll look for this to be picked back up around 12:30. I might actually have it here. Hold on, let me just show you this. I was showing it to some members last week and asking their opinion of this. I don't know if I was growing frustrated. I was growing more. Oh, wait a minute. I don't know where that might not be exact anymore, but put this up here. Put that over there. Just get rid of that London. We already swept that. Let's even pull this stuff up for you. I clipped these last week, and I want to just show you some stuff on playbooks. Let me see if I can find this here. And I think this is it right here. There's a fairly decent dump in here. So this is 1996 right here. Show you guys this really quick. Tighter, guys. Nope, not that. Get that back up there. Bring this just over for you to have a seat here and just see this. We had this high back here, consolidation. We actually ripped to a new all-time high. And then we dumped down over here. This was bigger than it looks. This was 601. This is 660 up here in a high. Fairly significant drop over here to the right. But I want you to see this like consolidation, like trying to sell it, a quick bump higher, and then a quick crash over here. And this was through June 19th, or excuse me, July 19th. So big squeeze up. And attempts to get to new highs over here and then down. And if we look at a minute here. No, wrong one. Hold on. I don't know where it is. Hold on a second here, guys. This one right here. This is 1998. And you can kind of see, this one's a little bit more blown up. You can kind of see this consolidation distribution pattern. It's very similar to the other one. And instead of rolling to the downside, maybe putting in a quick high and then rolling down, we wound up going up like 10%, huge squeeze. And this is in that July, this is like July 1st into, I believe, OPEX. No, it's into like almost end of the month for July. And then a violent move to the downside. We don't normally do this. We don't normally have like a bear summer. But in the late 90s, we did. Actually kind of frequently. Not every year, but 97, I think we just kept grinding higher and higher and higher and higher. And this kind of what leads me to the find any low and take it. Find any low you possibly can. Whether like any kind of doom, any kind of like volatility doom, bubbles bursting, cracks forming, anger, need Mag 7 TMT to join the gang. No, you don't need Mag 7 to join the team or anything like that. You want to be in on the lows so that when Mag 7 joins or TMT joins, you're already in. You don't want to see them already ramping the market up and we start climbing violently into the end of the year. It's very easy to become myopic almost. And the same with my calls for the end of July. You get this, or at least I do. I get this like tunnel vision where I'm like, ooh, start second guessing myself. And you really shouldn't be second guessing yourself here. We're going up, and the volatility can add to it, but at the end of the day, when you look at your calls, they're gonna fucking print. And this also brings me back to something else important. We were in I believe the COVID trade in 21 or something like that, and I was trading with a friend. There you go, up there and slap that fucker for 10 a.m. Go up there and slap that yellow bar. There we go. And I was trading Amazon with, I shouldn't know if I should say this or not, but I was trading with my attorney. And my attorney and I had gone to his office, and we were in this big conference room, and we were looking at trades and stuff. And he was like, "What do you think about this trade?" And I was like, "Yeah, I think it's a good trade." And it was like an Amazon call spread. And so we took the trade together. He put his own on, and I put my own on in his office. And it started making money. It was doing fine. It was up like 20, 30% or something like that. It was like a 3-month trade in 2021. Excuse me. My voice is still trashed. My voice is really bad. It's like I have damage. So I take the trade with him. The trade goes up pretty well, and then the trade starts losing money, severely, like hemorrhaging money. Very similar to this situation here. And we left it on because, at the time we left it on because we're in a bull market, and we're in this like inflationary trade. We're not we're not in a tightening. There we go. Get up there and pop your ass up there. I got a 741 C on right now. They're 89 cents. Got them at 42 cents earlier on the quick dump on the open. So I'm in this trade with this guy, right? My attorney, and the thing's bleeding out, and he's like, "What should I do here?" And I'm like, "Well, I'm going to leave mine on." I was like, "You do whatever you want, but I'm leaving mine on." And they were quarterly call spreads, and they did not print this fucking thing until literally the last day of expiry. And it went from like it got burned down to like 10 or 20% of its value. And then it printed 90 of the full expected print, right? When the trade was taken at like 3 o'clock in the afternoon. I kid you not, it was like 2, 3 o'clock in the afternoon. It went up to like 92, 93%. I was afraid it was going to be closed by dealers. And so I was like, let's close it. So we closed it. And yeah, get out here, by the way. Take profit here. We'll come back to sweep to take the next highs. So at any rate, I take this trade, and like it was an emotional roller coaster the entire time. It was a ton of money, and the key lesson was to stay long, and the key lesson was not to be shaken out. And if the stock market was easy, you would never get paid. I mean, it's not that easy. So these returns lower the pain trade. But the pain trade for my July trade, it's still on, and I'm not gonna fucking sell it. And I'm getting scared, of course. Or last week I was getting pretty scared about it, but I'm not that scared right now. So just note that emotion is to be expected if you're sweeping lows, and also the coming back for those lows 1, 2, 3 times. It's not uncommon these days. It's very common to like you pick the right low, you run it up, and then you're like, oh, I'm not going to take the money, I'm going to leave it on for more time. And then they come right back down like fucking 2 weeks later, 3 weeks later, a month later, and we're scraping again that same area of interest before going higher yet again. So I guess there's a couple takeaways. You can just say, fuck it, I'm going to do short-term trading only. I know how to call a bottom, crank it up for a week or two, and then we're out of there, or because of the trading environment, or because zero dates are ruling the day, or like you're getting your print that quick. I was so close to like the big fat print in the July trade. I should have just taken it and bounced. But it's still on. I'm still in this like habit of running these like 1-3 month trades. So we're going to leave it on and see what happens. I have a feeling that it's going to print the last day of the fucking month. Something stupid like that. So anyways, let's keep watching this. We'll see what's going on. There is something over here. There's a 4-hour block here and a 4-hour block right here. There's potential for us to come up here and trade. Trade this to come back down, and then try to grab these two up here, this yellow and red up here at the end of the day, on such a short week. But I think it's a little risky. So just if you're going to stay long here, you can do that, I guess. But I would say take the money and we'll come back. And you want to be buying this dip right here. Any sweep lower to 736, and then there's another one right down here. I think I wrote buy the dip down here. although I don't think we get to it until Tuesday. But there's one right here for Tuesday, and there's one, and we'll slide it over here just in case we do get a sweep early. It being such a short week, heading into a holiday. It's a beautiful trade right here. This is a great trade from overnight, and we came back for London. There was a gap in London, and we came back for it on cash. So all the euros are getting out now. We'll see if New York cash will pick up back up for a trend day. A few minutes here, guys. Hold on. I'm not getting much on Financial Juice right now. I've got it on. I don't hear it right now. I haven't heard a whisper from them. Tighter, guys. Dip buyers are driving stocks higher at the start of the week. That will be dominated by leaders of the world's major central banks and a busy data calendar. We have a really busy data calendar coming up all the way into the first week of July. And we discussed that last week. We don't have much today. We've got Dallas Fed Manufacturing Index. And I don't know why Financial Juice isn't on right now. They're posting weird shit right now. I'm assuming it's like no news or something because we're already into the 4th of July holiday. But on the economic calendar, Tuesday, tomorrow at 10 a.m. is JOLTS. And then on Wednesday, we get Fed Chair Warsh speech. The Bears want to see. Oh, yeah. On here. The Bears want to see Warsh come out and slam the markets with doom talk. I don't know that that's going to happen. We'll talk about it more today if we can, if we have some time. But at 10 a.m., interestingly, we get ISM manufacturing PMI. That is a big data point, and let's start at the beginning again. We get nothing tomorrow except for Dallas Fed. Or excuse me, this morning we get Dallas Fed manufacturing index. Not a big one. Big news is Tuesday for JOLTS. That's the 30th. Wednesday, the 1st, you get Fed Chair Warsh at 9 a.m., and then you get ISM Manufacturing PMI at 10. On Thursday, we get NFP. That's huge. Unemployment rate on Thursday, the 2nd. That's both at 8:30 a.m. And then we go through the short week and through 4th of July holiday, and then we come back on Monday, like right at 10 a.m. for ISM Services PMI. And then we get nothing on Tuesday. We get some ADP stuff, but then on Wednesday we'll already have that data anyways. But on Wednesday you end up getting FOMC minutes and then existing home sales on the 9th, which should be dog shit too. But still big data coming out the rest of this week into the first week we get back from the holiday. Let's watch and see if we can take these out into 10:30. Just these first two right here. This one and this one right here. I am not long here, by the way. I'm flat. Even if we can take them out, I don't like the risk of it, the FOMO of it. Same time, I just want to see. I got a position on for something else over here. Hold on. I got a bunch of SpaceX shit that I'm doing. Give me one quick second here. Get rid of this here. See if they're going to take this last high out. Check these flows. Maybe there's another one up here till 10:30.
Punchbowl News report that U.S. Secretary of State Rubio and Envoy Witkoff are to brief the House and the Senate on Iran today.
Remember, we got some self flows on 740. There'll be auto flows. Let's watch these buyers here. This is the 930 buyer. Let's leave this so we can see it. It's a nice sweep right there. I like it. Remember, today at 10:30 we get Dallas Fed Manufacturing Index.
Shares of semiconductor equipment makers are rising in early trade this morning. We've got Applied Materials up 5.5, KLA up 4.8, Lam Research up 2.7.
I think I might drop by this. Hold on here. All right, just started a small position here. I'll pick more up at 12, 12:30.
The yen reaches 161.97 against the US dollar. That's its weakest level since 1986.
Take this off just so we can see it.
So keep in mind, we are just seeing some sudden strength coming through in the Japanese yen here with no headline catalyst. So we're seeing this suspected Japanese yen intervention here as the yen did reach the a level not seen since 1986 against the US dollar.
I'm checking it right now, guys. Hold on.
So that's the dollar yen dropping sharply after the yen earlier hit a 40-year low against the US dollar.
I'm still having broker issues here. Last week I was having issues with my broker. I'm having issues right now.
The Nasdaq 100 is paired earlier gains, touching session lows here.
That one right there. We want to watch this one closely here. Make sure we don't get big sell flows into 12:30. Took a stab at it here at 10. Park just above the F&R trigger.
Newsom, the California governor, announces a California partnership with Anthropic. Amazon shares rising 4% here.
Half-hour trigger is bullish. Hourly trigger is bullish.
So in this agreement, California state agencies get Claude access at a 50% discount. So into this, Claude is the first AI productivity tool that will be available to all state agencies as well as cities and counties. The new partnership builds on a California governor's executive orders on generative AI and government efficiency.
I'm watching USD JPY back here. Watch that closely. Mm-mm. Pay close attention to these flows in between here and this time period right here, 10:30. USD JPY still moving higher, being sucked up right now.
The Nasdaq 100 now turns negative. S&P also pairing gains, now only up 0.1%.
I've got like a bunch of 749s for July 6th. They're bouncing around there like $1 right now, or just under $1 now, 95.
Qatar advises temporary suspension of sailing and all forms of maritime activity until further notice, according to their transport ministry. S&P now flat.
Almost there, almost there. Don't leave that behind. Keep going. Nope. I can't buy that.
The Supreme Court lets Fed's cook stay in her job for now. So that's the US Supreme Court declining to let Trump remove a Federal Reserve Governor Cook.
I just loaded the boat from like here, here, and loaded this, but I didn't touch that over here.
The Supreme Court in this expands the president's power to fire top officials. So that's actually the court toppling the 1935 precedent that allowed the independent agencies.
Not touching this here. This white line right here is a red weak line. I would need to be down, like scraping this to grab that. And I think we're coming back for this too. I just don't know when. This week or 2 weeks from now, we should be back down here again. USD JPY still moving higher now. We're good. I can't add here. It went down to like 91, 92, and then the 80s for a brief second, but it's too fast for me to try to jump on them. And if we sweep Thursday, Friday, I want to be able to buy those too. A little bit of supply on USD JPY.
And it's time now at the bottom of the hour. We get the Dallas Fed Manufacturing Business Index for June. Forecast of 1 on the prior spot 4.
I'm just looking at some data right now for the Dallas Fed. Expectation is going to come in very good. A little bit of supply coming in on USD JPY now. VIX 9-day bullish. Watch for a roll.
Some more information on the earlier Qatar headline. So it does say that vessels subject to international maritime conventions are exempted. So this is with regards to Qatar, who have advised a temporary suspension of sailing and all forms of maritime activity until further notice. But again, they do clarify that vessels that are subject to international maritime conventions are exempted. In 5 minutes' time now, at the bottom of the hour, we see the release of the Dallas Fed Manufacturing Business Index for June. Forecast of 1 on the prior 0.4.
I'm also going to be adding 740 Cs for today.
So we'll bounce off of the session lows here. S&P up 0.2%, Nasdaq up 0.3%, Dow up 0.4%.
Dallas Fed should come in kind of hot, which is good. Or the expectation is that it will. ISM manufacturing's been running really hot. It's been booming right now. ISM, we don't have that coming out today, but we do have it coming out this week. ISM manufacturing PMI is Wednesday at 10. It should show things are really good. We can get in and out of this here. Come up to this 5-minute trigger right here.
So shortly explaining the Dallas Fed Manufacturing Business Index.
It's a nice quick trade right there. Here's your first stop off the bus. No requirement that we come down here. Just want to keep an eye on this.
Dallas Fed Manufacturing Business Index at 0. That's 0. Lower than forecast 1.
Hmm. The forecast was 2. It was at 0. The prior, though, was 0.4, so it's still higher. Don't take that as a negative there. They forecasted it stupid high. It's still higher than it was the last one. So it's still good, still bullish. Forecasts are through the roof because we're cranking right now. Trade 736.90. There's the target hit right there. Just want to see if we roll down and kind of dive the rest of the day or not, or find out if we can go back up here, trade the equal leg. Somewhere right in here. Forget we've got this 4 here and this 4 here to take care of. Needs to be swept. Going back for 740 again. Hang tight, what's there, guys? We're fucking cranking here. No, I'm good. I need some ice. Sorry, I've got my my throat has been really bad, like damage. Too much talking.
So Wall Street Journal's Tim Morales on the Cook situation says the Supreme Court ruled 5-4 against Trump on Lisa Cook. It says at the minimum, Cook was entitled to some explanation of the evidence at issue and some avenue for a response, and a deadline by which a response would be due. For those interested, we've posted Wall Street Journal's Tim Morales' article on the feed for those interested.
Took a nice swing here at 10 a.m. all the way to the downside. Cleared up some of this. Short week. I want to see if we get knocked back down here, or if these buyers that are coming in between 10 and, or if these are buyers or sellers. I think they're buyers, but we want to watch it closely. This is the one to be watching up here. This is actual trend up here. This one, then down this one. Show it to you.
So Axios is Ravid on X.
So up, down, and then up this way here.
Will travel to Doha today
Looking
and
for a
meet
print up here to this close.
and other officials to discuss
740, 742, somewhere in here.
The US and Iranian technical teams will be meeting separately with the Qatari and Pakistani mediators.
I'd like to see by end of day at least above 740. Maybe 742.5 would be nice. And then 746. I do think when we get up there, they're going to try to bomb us, though. I think that's where the largest danger is. 746 is where they're trying to crash the market. If they do, they take us like 690. 700, 690, somewhere down there. We're going to find out up there for sure. We'll go back and look at the 1996 and 98 version. I think it's the 96 version is what they're trying to run, but I think there's still danger of this like huge move squeeze higher thing. The 96 trade would put us down at like 690, 700. I measured it last week. They're going to try to come in at 745, 746. We have to, what that zone is very dangerous on the upside. It's up here. It's right here. This is kind of a key area up here. If we cannot get above 746.43, quick, like fast as fuck, like today, tomorrow, Wednesday, Thursday, they're going to try to sell this. If we fail to get above 746, they're going to try to trade us to 700 to 690. It's pretty much the same playbook from 1996. On the flip side of that, if we break above that 746 and we can hold it, it should be rip your doors off. And that would be the 97 or 98 trade. It's violent to the upside. We actually go up the entire month of July, I think. It's straight vertical, just straight melt up. And the only thing that I can't say about that stuff is that it never actually trades exact. Like it might do like 2 or 3 of the parts of it, but not the entire thing. It's never exact. This is a key level right here. We can talk about this too, what this means over here. But there's like a 1, 2, 3 count up here, going back from the top, and we failed to get above it. So let's watch this closely. What is 76.43 to 700 or 690? I didn't measure the actual. Let's go up here. Let's go. I've got the mark down here. I got it 699.09. Yeah, that's from tip to tail. It's 6.36%. So 6% down move if we sell that 746. Thank you. If we went 690, it's even worse. $7.5%. And we've already traded this too. Like next stop should be like, or theoretically it should be 746. Because we already swept this here. The next major inflection point, 746. We go at 72. Well, sorry, 742.5. But then the real one is 746. It's up here. This bad boy right here. If we can't look above this white line right here, if we come up here and like we ting this and come straight down, I'm bearish. Bearish on that. Bearish on this. We would need to like break above, look above, and then hold the half an hour to go higher. And even then, I think that would still be a sweep to the daily trigger, which is way the fuck down here. This is the weekly sweep right here. So even if we hit the 746, you'd still be coming down to 736. That's still violent moves. 10 points on SPX, or excuse me, on SPY. It's that same, like, if you look back every month in June, like right around the 21st, there's normally, there was a high put in on June. Here, I'll see if I can draw it out for you guys, show it to you. right here. This is where this my concerns right here. Right there. Did it show that? Hold on here, guys. It's right over here. You can see it right here. This one right here, this high right here, and then this one right here. This is the June high right here. So you got these sellers right here. These sellers right here. These guys don't mean nothing. These are the ones you want to watch out for. This would be the test for the back test on the June sell. And so it would be right over here. This is where I think that they are. That's like 746. See it right here? So if we go up here, I got some concerns. We got to get above this. So I've got this all marked out up here, and it's not good enough to just, it's not, you gotta kind of be like, break above, take all those out over there, start back testing it. You really got to take their stops up here, and I don't know that you can. What they're trying to do here is like trap us in and then dump us down into, I'll show it to you here. This is the 96 trade right here. Now, there's something else to be said here too, which is, 2 other times in that 3-year period, it was basically vertical. It was like spot up, vol up for this whole thing. We just mooned. But if they do keep us in, they're trying to do this down here. And it's probably going to probably panic everyone and sweep all this. And you'd start some kind of accumulation down here. And then shank all this stuff out in here. There's 690. Somewhere right down in there. We're not there though yet. But I would assume that you can look at it. This is a better way to look at it. So they're here. And if they're able to sell this down and this is not where we're supposed to be buying, that's that whole zone right here. You see it? And then it brings into question all this stuff over here, of course. There's that line right there. And you start dipping down in here and it becomes party time. The only good thing is that you've got a big base over here. So I've got this big block here. You can see it. And in there where they should be setting up right in here. Hold on here, guys. So there is a trap for bulls. Don't worry about this one. This doesn't mean anything. And that means anything, I think, is this one right here. Probably pull that lower. And this can all get bought. You don't have to go down there. I'm just using this as the base for any other bullshit that's all going on down here. Still not above major sellers. 746 is where it's at. You're going to find out up there if we sell 746, pull the plug on everything. We're not there yet, but And you can see these guys already taking a shot at it here. I don't think 40 is the sell at all. No, the real big boys, the real like old men sellers, they're higher. And of course, the other option here is 98. Or we can look at all of them if you want. Here, let's take a look at them, because I haven't shown this publicly. And the two charts that I showed you are kind of gnarly, or not gnarly. They're hard to kind of read. Go to. No, let's not do that. Let's look at it like this. No, I don't want that one. I want hot stocks. SPX. The daily. So I can go back to this time period. Let's go back here and look at this really quick. So this is 1996. We'll look at 96, 97, 98. You can see that they're definitely, so usually summertimes in modern history, we're not doing this in summertime, but this looks like you get the 1, the 2, and then the 3. See it right here. This is July 2nd. This looks common, right? I just showed you this a few minutes ago on another chart. So this is the playbook, at least. Like blast us down, come into the beginning of July, and retailers ramping it up. You can see it right here. We're coming into July 1st, and we failed to get above this 1, 2, 3 up here. Do you see it? It's not actually labeled like that. It's labeled like ABC, but it's like 1 for people that don't understand L8 Wave at all. It's 1, 2, 3, and that last sell was a doozy. It was pretty gnarly up here. This was the low. That's 10.3% tip to tail, and we're already looking at about 6 to 10%. So they're trying to run this trade right here. Okay, so this is 1996. Let me just show you 97. We'll go over to July of 97. See what happened here. And this was a monster move higher. And there's no comparison in this, right? Just crank, 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 crank. That's an outlier. So you've got, but this looks like the playbook right here. At least right now, this playbook right here looks like it. And then we don't look like we're doing this, but just be aware that in this case, we mooned 1997. If we're in 1998 and they're running that playbook, I took a look at that one too. And this one was wild. And we did just have like this big squeeze thing coming up. What's fascinating about this is that we have basically gone nowhere, which is very similar to right where we are right now. We had this same like consolidation thing. And in turn, what we did was we fucking super ramped. Like we squeezed. You see it? Squeezed up here into OPEX. And this was very violent. But it still resolves into this like huge down move. It's like, let me measure this for you guys, show you this what I mean here. So theoretically, if we're Not that we're going to trade exactly this. Don't hold me to this, but this is a 10.7% up move in like just a few, not a few days, but like 2-3 weeks. That's a fucking monster. But then it resolves into, no, bro, we're still going down. So in like 96, we did this. 96, we did, something like that right there. Like in like 96, we did something like this, down right into the end of July or whatever, or excuse me, over here. Sorry. In 96, we did this over here, right? We blast down, but still resolves crazy to the upside. And in 98, what we do is we squeeze the balls off, but then they still take us down over here, and they get so fucking angry about it. They blast it down into October. So there's 3 different outcomes here. And there is extreme danger of this like big squeeze thing, like this like vertical. So I guess you could count it in 2 different ways. If we started selling now, and if they're running this trade, it looks like they ran it 3 straight times, literally. They ran this fucking trade 3 straight times the last part of the bubble in the summertime. And in 2 examples, they lost, and we went literal vertical in both examples. It still resolves to a fucking crash. Like, it all comes back. If you do like the vol up, spot up kind of a trade, it all comes back anyways. And it can be more violent. In this example, showing you it's more violent. So you could make an argument to some extent that if they're running that trade, the more painless part of that trade would be to trade 700, like fail 746, trade 700, 690. That would be the least volatile outcome and the least downside outcome. If they fail in both other scenarios, it's literally vertical. It's like violence to the upside. Now, I hate trading I hate trading against history like that, like executing actual trades. But I think it's a good primer for what the thesis is from sell side, or at least the thesis from like running playbooks. And these guys do run playbooks. They don't change anything. They literally, like, not they, like the banks, like JPM, they have literal like binders. I don't know if they've digitized them now, but I spoke to a guy once that talked to me about it, and he was like, no, they'll literally pull out old books and say we were in this trading environment, what worked and what did not. So you're going to expect someone out there smart, way smarter than me, just looks back and says, this is what we did in the summers of the 90s. And this is where the danger is if we squeeze, and we should be trying to sell it down. And if we go above, and that's kind of why I have this up here, is we're going to find out up here. We're going to definitely know in this vicinity. Now, I have 3 white lines here, and this denotes time. The more time that passes, the more they can sell off of this 743. The less time that passes, the more they can sell off 746. And you should have retailers ramping us into the end of this week, and then we'll find out how this goes. Recovering a little bit here. Nice little dip buy down below. The key here is 746, or as of today. And the longer we take to get up there, it could be 743 if they start selling it there. And if they do start selling it, we'll switch to sell side. All we have to do is lose the hourly trigger. If we lose the hourly trigger, we're going to start hammering this shit down to the depths of hell. And I'll close those call spreads, and we'll get the fuck out of here. Oh, and one last thing. This is the other fucked up thing here with all of this. The other part of this is that in all 3 scenarios, it didn't matter. Every single scenario, they all resolve to stupid upside. Like, it's obscene, like 30, 50% gains, 100% gains. So don't get all bared up being like, oh, the market's dead or whatever. Like, you literally have to put a seatbelt on and add any of these big downside moves because the upside moves are like double, triple the drawdowns. So you just gotta, you just hang on. That's all you do. Hang on, stay long, add.
Apple's use of blacklisted chips. This is following an FT article from over the weekend where Apple sought US approval to buy chips from blacklisted company CXMT.
On your own, take a look back on that time period. It's like, I'm gonna just go back to this really quick and show you this thing really quick. No, hold on. Top right. So this one we went violence up, right? And the downstroke was brutal. Let's look at this from tip to tail. That's 22%. Like middle of summer crash. Tip to tail. Now, I don't think we're going to do this exactly, but let's just pretend we do it again, right? So you're like, oh my God, we just crashed 22% into September 1st. And you're like, bull market's over. Bubbles cracking, all that kind of stupid shit. Let's look what happened at the end of the year. It's fucking stupid. Yeah. This fucking thing goes literally to the top. That's a 67% gain. We're trading 680, or 690, 700, and you put 67% on that. That's 10,700 into the end of the year, into the next year. No coming back from it. No nothing. It's just vertical. There's one more pullback over here, in October of 99, a year later, but it's literally violence to the upside. So depending on how you look at it, like the if this then that, if they sell 746 or whatever and we go down and trade 690, it doesn't matter. You're talking about this. The question is, where will the stock market go from there? If we run that playbook, up 67%. That means like SPOO's trading 1300 or something like that. Just here, they came right in, trying to sell this still. See him in here. Trying to keep the man down over there. Move this one higher. This one up right here. I think the reason I'm showing you these two is also be afraid of the other outcomes. The other outcomes are violence to the upside, because like 97 was just vertical. 98 was vertical, then crash. 96 was a nice roll. I think they're trying to do the 96 one. If I had to guess, it's that one. But if they fail on that 46, then the only other two options is we go vertical into OpEx for July. Like literally just vertical. In both scenarios, in two other scenarios, it's vertical. So, and VIX 9-day is showing that same trade, like either the crash off 746 or the spot up vol trade. It's very similar conditions in VIX.
Israel's Channel 13, citing Defense Minister Katz, says, "We're prepared for blue and white operation in Iran. The stay in Lebanon is long term."
What is Warsh? Warsh is Wednesday. Warsh could trigger it. Watch this right here. Yeah, I'm reading about the news during the 96 corrective move. There were the midsummer correction in 1996 was one of the worst in history. There were questions about corporate earnings, and there was questions about rate hikes. July 3rd, I think we had a FOMC meeting. We didn't get a rate hike. Bond market had one of its biggest sell-offs in history at that time period. And then, of course, corporate earnings dragged us out of the slump. I think that those those numbers up here, these are the keys right here. Still need to reject it. I need to see that third sell. We haven't seen it yet. Just parked, not doing much right now. Remember, we get new flows coming in here shortly. Look for these 12:30 flows. I think they're going to be up. We're going to close in a high today. Try to get up to that 43 to 46 and see if we can instigate the sellers. Also note that hang tighter. I'm trying to read through some of this. I don't think I have any shortened sessions this week. It's just the Friday we're closed. I'm assuming by Wednesday, I'm hoping by Wednesday we can sell. That's the or I'm hoping by Wednesday we can be up at 746. We can get up to like 746 by Wednesday and then put a sell on the market for the weekend. If we reject that 746 up here, whatever that those numbers are up there. Up here, down, sweep all this stuff, try to pick this thing back up for 1230. Put another stack of 0 dates on. We'll watch this closely right in here. Coming in like 12:30. Try to ramp this thing up into the end of the day. You took that one out. That one's gone. Just wait on this one right here. I want to say it's that one, but could be higher. Could be right here, but I'm going to bring it lower just in case, just as a speed bump.
The Fed bids for 3-month bills totaling $6 billion and 6-month bills totaling 5.1.
I'm interested to see what Warsh has to say. I'm interested too because in '96 we had an FOMC meeting, and I think it was July 3rd. We don't have one, and he has a speech at 9 a.m. on the 1st. I'm going to see if these are buy flows into the close today. Just waiting for 12:30. Patient in here. Same as back here at 10:30. Don't do anything. Buy that up. And also remember that we're not yet at the sell on 746. In 2 of the 3 scenarios, we went moon, not down. We actually went moon. We literally ripped their faces off. It was gnarly. One quick second, I'm going to get up here. I'm going to do some jumping jacks and lift some weights and have a quick yawn coming in. Let's be patient here into this 12:30. Let's watch these flows. You want to see a little bit closer blow up look at this? I've got it going up. You can see this here. I'm looking for this 740. We haven't hit that yet. We missed this one, so we haven't hit any of this. We're going to be looking for another drawdown in here. This one should be more violent. And this one should take us up into that 746, 743, 746. Up in here, and this is where the danger zone is up here. Like 15 minutes or so. I'm just going to work out, do some jumping jacks. Look, we're looking for a sweep to pick this up here. Anyway, I don't care where price is, as long as somewhere in here. Start picking this bad boy up. Half an hour triggers right here should hold. Hourly triggers should hold as well, like it did earlier. Velocity is good right now. It's bullish. Just be right back in just a few minutes here.
In 10 minutes' time now, at the bottom of the hour, the US is due to sell $92 billion in 3-month bills. The prior high yield was 3.695%, and the prior bid to cover was 2.68. The US is also due to sell $79 billion in 6-month bills, with a prior high yield of 3.84% and a prior bid to cover of 2.51. Trump on Truth Social says we will take the appropriate action on Fed Cook's lawsuit. So Trump is still saying that he does want to try and get Fed Cook removed, saying that he will take appropriate action. This is following the Supreme Court, who have blocked Trump's Fed firing, but does allow the removal of other agencies. In 5 minutes' time now, at the bottom of the hour, the US is due to sell $92 billion in 3-month bills. The prior high yield was 3.695%. The prior bid to cover was 2.68. The US is also due to sell $79 billion in 6-month bills, with a prior high yield of 3.84% and a prior bid to cover of 2.51.
Just a note for you that the half an hour trigger is coming up and over the hourly trigger on SPX on an hourly basis. Take a peek at it. Market is set up for a huge move higher.
We're shortly expecting the results from both the 3 and 6-month bill auctions. 3-month high rate of 3.74%, 3.74%, with a bid cover of 2.32, 2.32. For the 3 months, the US sold $92 billion and awarded 85.81% of bids at high. 6-month high rate of 3.84%, 3.84%, with a bid to cover of 2.54, 2.54. The US selling $79 billion and awarding 96.12% of bids at high.
when you're in like the bubble, it's like everything is big, 20% down, 10% down, 30% up. Even SPX looks pretty fucking bullish too here. A 130 sweep. It was Tuesday, Wednesday. We already tagged Thursday. That brings up 746. Almost there, guys.
EU Sefcovic says China-EU trade trend is not sustainable. So this is
Bullish on these flows into 12, 1230.
China's Wang.
I'm going to be grabbing some 0 dates here in just a minute. Just want to wait for that the 12, 1230 flows to come in. You can go up here and like hit this, right? Come back down for that sweep, cup and handle forming.
EU Sefcovic says we agreed to set up a joint monitoring system for trade with China.
I'm about to come on here, guys. So I got here, NDX futures are bouncing from the lower, this was earlier this morning, bouncing from the lower trading range, right around 50-day moving average. Despite sharp swings in volatility, the index has gone nowhere since early May. Mean revision has continued to outperform, while momentum breakout trades have repeatedly failed. I'm not really concerned about the breakout trade. I'm more concerned about the 746 shit. I redrew it in over here. I did spend some time drawing this in over here just to show that trade from the 90s. Let's see if I can show it to you guys. I was just talking to someone here in the background about it from the from 96. This is the consolidation, or does it become distribution trade down? This is OPEX somewhere in here for July, but in two other scenarios, we did not do that. We went up here. In one scenario, we went up, squeeze like crazy up into OPEX, and then they hit a larger dump even lower, which is, we'd be closing like a gap down here. It'd be violence if we can't escape it on a squeeze higher. So we're like looking for this. I think that was 96. 97 just ran away with it. 98, we squoze up. And then it became an even larger correction, but it still didn't matter in every other outcome. All outcomes, it was still resolving to the upside in this major upside trade. But just so you can see where it is and where they are up here. And just want to note here really quickly, we can look at SPX if you want. And this is the same trade. This is the gap that needs closed right here. The half an hour and hourly trigger is running up to squeeze this higher. The bigger question just becomes, are we, closing this gap up here? And then that roll is right in here. You see it? This is the 20th high up here. So it's like right there. Start breaking out, right? Take some of that out. This comes over here, smash that thing up there, and then whammo to the downside. We just have to watch this up here. And I wouldn't get too concerned yet. Oh, here, I want to draw it like this just so you can see it. So up here, smashing him. We already took this wick out already. So take this one out up here, right? So we take that one right there. The big thing here is you don't want to go getting crazy into middle of June unless we break below. Hold on here. Break below this half an hour hourly trigger. We can get underneath here. I'm down to sell this thing down to the depths of hell, but we're just not there yet. So there's nothing to do except for pound higher, and take this to long in case it starts breaking out. Quite stupidly to the upside.
Increased market access.
So this is like this is the zone right in here. We just need to watch this. We need to make sure we're not losing the hour and a half hour. But we should go up here and at least test this. Just be conscious of that high back here and the one that's right here. Not this one. That's the one you want to watch. This is where they came in. They sent this fucker down to the depths of hell. Failed here. This would be their last chance right in here. Last chance for the seller, so. And there'll be no pre-market and after hours, no extended hours of trading will occur on the 3rd. Bond market closes for a full day on Friday. Bond market closes early on Thursday at 2 p.m. If you want to know that. Futures markets, equities, interest rates, metals, and energy early close at 12 p.m. on Friday, the 3rd. The rest of the world will still be open. It's our holiday, not the world holiday, or not celebrated by most places. It's not like a major religious holiday. Let's wait for these flows at 12 and 12:30. Daily Velo looks great. Weekly looks kind of shitty right now. Daily Velo looks great on SPX. Weekly looks like shitty. How we close this week is going to matter. I'm fascinated to see Warsh's presser. Or not presser, but excuse me, testimony. The European Central Bank's annual forum on central banking kicks off June 29th in Sintra, Portugal. This year's lineup reads like a central banking Avengers assembly. Kevin Warsh, Fed Chair Kevin Warsh, ECB President Christine Lagarde, Bank of England Governor Andrew Bailey, and Bank of Canada Governor Tiff McCallum will share a policy panel stage to discuss innovation, growth, and the question every market participant is asking: what does AI actually mean for financial stability? For Warsh, this marks his first major international appearance as Federal Reserve Chair. That alone makes Sintra 2026 one of the most closely watched central banking events of the year, rivaling the Fed's own Jackson Hole Symposium in terms of market-moving potential. What's actually on the agenda? The 3-day forum running through July 1st carries the theme Shaping Europe's Future, Innovation, Growth, and Stability. Dedicated panels will tackle AI's implications for financial stability. Lagarde has emphasized AI's crucial role in driving global growth and innovation, though the agenda explicitly includes the risks related to AI investments and inflation, two forces that continue to challenge central banks worldwide. Policy panel features Warsh, Lagarde, Bailey, McCallum, brings together three financial crisis veterans. Alongside one of the newer face top global, hold on a second. Markets will parse every syllable from Warsh for clues about the Fed's trajectory, especially with above target inflation rates persisting across major economies. In that 1996 and July 3rd, we had an actual FOMC meeting. Rates remained unchanged. It also marked a market high where we started rolling into July. So they might be trying to use this Sintra thing as something similar, where it's not an FOMC rate decision. And even some of the news, this article I'm reading right here is making a note that this is even more important than an FOMC rate decision. It's literally the same fucking playbooks. It's like the same shit, same fucking. Nothing's changed. With Warsh making his international debut as Fed chair, markets will be watching for any hint of divergence between U.S. and European monetary policy. That's not really true either. The tokenization sessions are perhaps the most directly relevant digital asset investors. See if I can find anything else on this. I'll show you this too. This is contra to that 746. And this is from Equity Clock. And now, seasonally and historically, this is the best time of the year. According to Equity Clock, this is the bottom of the market, right where we are. NDX seasonality turns notably stronger from here, with the index historically delivering one of its most favorable periods of the year. If seasonal patterns hold, they could provide an additional tailwind for short-term catch-up for tech. I think, like what I want to say to you is that, I think I said this earlier, but I think it all rests on that 46. Could be 43 if it takes until Thursday. But in all scenarios, it's volatile. In 96, we rolled. In 97, we squeezed and went vertical. Just didn't stop into the end of the year. 98, we went vertical. So in line with this, but it's still, the volatility remained. We still wound up having like a 10% up move, 20% down move, and then like a 67% up move. And VIX kind of shows this right now, this volatility that still remains. So I guess Warsh, if Warsh really wanted to, he could sell the market. That would be the lowest downturn we would have in all three of those scenarios, or two of the three scenarios. If Warsh doesn't say anything and he's kind of bullish or whatever, we go vertical. In two of those scenarios, one of them does lead to get another crash. But it all makes sense. Like we're like you're in a bubble. You're in the end of the bubble, or not the end, but if you had three parts of a bubble, are probably in the third part of it. And we're likely running that like 96, 98 to 2000 trade right now. So it's not like you can predict what the outcome is going to be. You're just looking for like, what's the inflection point on that 96? Like, does the inflection point on that 96, we pull off of, or we reject it, let's say, even if we look above, we reject it. We start trading back down to the hourly trigger, daily trigger, whatever. If that shit holds, because it's all the same place right now, you can see it. Like the hour, the half hour, the daily trigger is basically the same place in a few bucks. So I mean, if that stuff holds, we will do that with that chart that I just showed you. But so we're just looking for a pullback to buy, and if it doesn't, if we pull back and we don't see the buy, we'll sell the fuck out of it into the end of July. I don't think you can definitively say this is going to happen or that is going to happen. Just a matter of that 746. This back here, let's watch this go up. Some argument that what would start the roll would be, as a matter of fact, if we do roll, probably want to short small caps. That would be the leader. Move that out of the way for the minute or delete it or bring it back once we get past the 12 p.m. Yeah, I'll read you something here because this is you can see the like they're trying to make the case right now is like a bear here from Bloomberg. It says the S&P 500 gamma has dropped sharply back into negative zone, which points to greater volatility and portfolio de-risking. I wouldn't be doing that. It ain't nowhere near that yet. Like, I don't know what that means. I would need to see like the sell on 46 and then the loss of the hourly and daily. Then I would de-risk then, but not until then. It was an unusual week for SPX in which market closed lower every day. You have to go back to April 2024 and February 2020 before that to see the index down each day in a full Monday to Friday week. The configuration seen in only 90 of the 5,100 weeks the S&P 500 has existed. Futures are up Monday morning, but even more germane for the price action to come is that gamma sank into negative territory. Its third lowest value on record based on Squeeze Metrics measure. As the chart below shows, I'm not going to show you the chart, but positioning of investment managers as collateral by the National Association of Active Investment Managers tends to track gamma relatively well.
The information reports that Amazon could pay more for Anthropic under a new deal.
I don't think that this applies today. Like, I think that they refuse to look at or address. You know, this Bloomberg guy is looking back in the 90s. He ain't going to tell you this is the norm for where we are.
Is evaluating other AI models to mitigate rising.
He's trying to address like 2020 and 2021. I'm not looking at 2020 and 2021 at all. And neither of these guys. These guys are all have the same fucking playbook from the 90s. They're literally running the exact same playbook. I even looked at 2019, 2018, I think, whatever Trump's second year was. Like after he was elected, to see if we're running that trade right now, because we did have a down summer that year too. It was similar, but not exactly the same. Disintuitive is as when gamma goes negative, there is greater potential for higher volatility. I agree with this. Now, this part I agree with, like the mechanics of this. This is intuitive as when gamma goes negative, there's a greater potential for higher volatility. But that volatility does not mean bad volatility. It just means volatility. And I showed you those three scenarios where we got the volatility in all three, right? We had the one scenario where you just go moon. We have the other one where we go fucking moon, and vol follows us all the way up. Vol spall up, and then the vol follows us when we start to roll down. And then the last one, of course, or the first one would be where we just fail the 46, and then we encounter volatility in a negative fashion. Higher volatility is more likely to lead to portfolio de-risking, not least among vol control funds, which mechanically de-risk as volatility rises. That doesn't mean anything to you either. If we start squeezing balls off, we'll just take all their fucking money. Factors potentially aggravating Friday's price action include rebalancing of the Russell indices, which likely had spillover effects to the S&P. Options expiries for OPEC, quarterly OPEX, and not quarterly, but quarterly end, quarter end rebalancing, quarter end hedging. But the latter may have had something to do with the odd price behavior in the last minute of Friday's trading when the S&P 500 dropped 10 points, then bounced straight back. Either way, the themes that have been driving the price action and dealer option hedging activity are largely still in play, with speculators chasing geared upside in semi-names by buying call options and leveraged ETFs. So we can go up here and tag this one. Then we'll do the handle going just after this. Either way, the themes have been driving price action and dealer option hedging activity are largely still in play, with speculators chasing geared upside in semi-names by buying call options and leveraged ETFs, keeping single stock vol elevated, while the VIX remains subdued. Yet there is now some risk aversion seeping into trading patterns. The put-call ratio for single stock options has risen as demand for puts has jumped higher. This is actually bullshit, not bearish. You get all this like put hedging activity. You get volatility rising. And then, hold on. Dealers end up chasing the other side of that trade, rip their faces off. Put this back here, see what's going to happen over here. We're like very close to a pretty big ramp to the upside. Just want to watch where these guys are down here. Also of note too, let's check this really quick. Yeah, we've been going down here from June 15th until June 26th, or excuse me, June 15th, June 26th, something like that. Let's see if we can catch a sweep in here. Grab that one over there and then up. I'm going to show all these. I don't think that one matters. There's one more down here, but this one could get dragged down here. Leave it right there for now. Looking for this big move up into the close. I'll try to grab some 0 dates in here. Maybe 1 dates at this point.
So, according to Qatari state news agency, Qatar's Minister of State of Defense Affairs discusses regional developments aspects of the joint coordination with Iran's acting defense minister.
Try to add some 0-day calls up into the bell, or 1 dates, one or the other, whatever you like. With liquidity tightening, positioning stretched, and instability rising, the risks for market continue to stack up. I don't think so. I think the only risk to markets is a rejection of 46 and then a loss of the hourly trigger. I think that's when you start going risk off. I think this is the risk on time. Global attention this holiday shortened week will center on the U.S. labor market with the June employment report due on Thursday ahead of Independence Day. Employment should be fine. If anything, it should be hot. A reminder that the U.S. will be 250 years old this week. Alongside that, central bank communication will be focused at the ECB's Sintra Forum. It's going on today through Wednesday, but the most notable part of that is, of course, the Warsh speech, which is on the 1st. Inflation data across Europe and activity indicators in Asia, notably China's PMIs and Japan's monthly data, round out a busy global calendar. In the U.S., DB economists expect payroll growth on Thursday to slow to 75,000 from 172,000 previously, with private payrolls rising by around plus 90. There's some risk of seasonals pulling down the numbers as they have in recent years around this time. The unemployment rate is expected to hold at 4.3, while average hourly earnings are seen unchanged at plus 3 month to month. The wages should be fine. They are usually lagging inflation and lagging an expansion phase in the economy. You shouldn't see those numbers come in too bad just yet. We have like wage price growth or wage spiral or something like that to the upside. Hours worked are also expected to remain steady at 334.3, leaving nominal income growth broadly stable. Ahead of that, today is the Dallas Fed Manufacturing Survey, but that doesn't mean shit. It's not really the most important thing out there. While tomorrow sees the May JOLTS report, that is important. Where markets will watch for any shifts in hiring, quits, and layoffs amid a still subdued hiring environment. It is not a subdued hiring environment. It's a very good hiring environment. It's looking for the right job. We can grab this in here. Just like sweep this and hit it. Or hit this and then come back down and hit it. Either tag this one, come down here and we're out of here, or come straight down here so I can just buy that. Just be patient here. It's just like earlier. Wednesday then features ADP employment report alongside ISM manufacturing. These releases should help set expectations going into Thursday's payrolls. Beyond the labor market, tomorrow also sees the Conference Board's Consumer Confidence Index. On policy, attention will turn to Wednesday. This is the juicy part here. When Fed Chair Warsh speaks at the ECB's Sinatra Forum, DB economists continue to expect a relatively hawkish policy path. And that speaks to the idea that the economy is great, a restrictive environment is warranted. That's bullish, if you don't know. With 2 rate hikes penciled in later this year, I don't think you're getting 2. I think maybe if they're small, you could get 2. I think the threat of a hike is enough. Maybe you get 1 hike. I think it's hard to explain. Like on the one side, I'm like, we should hike. But on the other side, they want to run this hot. So they have room to continue to run it hot. If inflation can get high enough, maybe 4.5 or whatever, I would think 1 or 2 hikes at that point would be warranted if they're trying to run it hot. If we weren't so greedy, if we're trying to stay in the frying pan and not expand the economy, I would say we should have already had a hike. That's not what the president wants. Trying to pay down the debt. Looking beyond Europe's main event is the aforementioned ECB's annual Sintra conference, which begins today and runs through Wednesday. In parallel, inflation data will be a key focus with Spain and Belgium reporting today, followed by Germany, France, and Italy tomorrow. And the Eurozone aggregate on Wednesday. DB economists expect inflation of 2.46 year over year in Germany. So maybe keep an eye out on some of these data points coming out while Sintra is going on. A bunch of smaller ones like Switzerland releases CPI on Thursday. In the UK, the B of E publishes its credit conditions survey on Thursday and the DMP survey on Friday. In Asia, China releases various PMIs in the first half of the week. In Japan, today's retail sales out earlier is followed by industrial production tomorrow, where economists expect a 1.4% month-over-month increase. The highlight, however, will be the Bank of Japan's Tankan survey on Wednesday, which is expected to show broadly steady sentiment and may reinforce the case for further gradual policy tightening. Finally, looking at just the U.S., Goldman writes that the key economic data released this week is the employment report on Thursday. Fed Chair Kevin Warsh is expected to speak at the ECB forum in Sintra, Portugal on Wednesday. I'm sure he'll be trying. I mean, I don't know if he's not sure he's going to try to talk markets down, but I think he's running the Moran playbook, basically. Talk markets down, run it hot, and beat the market down with knee-jerk rate hikes when necessary. The employment market isn't. I want to say it's not bad. It's not great, but I don't think it needs maybe 0.25, maybe 0.5. Spread them out over 2. I mean, a couple 25 just to cool it down a little bit, but these guys want to run this shit hot. I mean, I don't think he's going to take. I don't think like the thesis that he's going to take us back to like 2.5%. I think is false, or at least at the moment, it's false. I would maybe argue that could be a potential thing to happen, but it wouldn't be until after midterms. Or I would think that Trump would say after the midterms, I don't give a fuck anymore. What happens? I think mostly it's that midterm thing. I don't know the politics of that. I don't know if Warsh will listen after the midterms or whatever. Maybe they made a deal. We run it hot for now, and then we don't care thereafter, right? He's a lame duck, so Warsh can do kind of whatever he wants thereafter. As a matter of fact, there's a window for Warsh to be that guy and then soften up for the next presidential election. I mean, an argument made for that too. It's very late right now in news. I want to say it all just rests on price action here. 746. Whenever that happens, and where are we when that happens? Are we like right there when Warsh speaks?
ISNA News, citing Iran's embassy, say preparations for negotiations with the US in Doha have not yet started.
About to get long here in a few minutes. Try to catch some 0 dates here to the bell. So this last one down here too, but I don't think we go this low. There's 1, 2, 3 right here. 1, 2, hopefully 3. Try to buy this. It's kind of a shit place to be selling. Like I didn't sell puts on a SpaceX. I want to sell calls on them, and It's not enough options or dates available. I was just thinking in my head a few seconds ago, I'm like, I mean, if we didn't actually trade that 76, I would fucking probably throw my headset across the room. Like, try to come in and sell it early or something like that. I'd be fucking hella pissed. This one here. There's another one right here now. Two minutes left. Still haven't taken out this high yet. find out right now. It's like watching fucking paint dry. USD JPY exhibiting a little bit of a roll. VIX 9-day getting shanked down to 16. A note that the half-hour trigger is racing up on SPX right now. There is a 6-trigger cluster on SPX right now. It's bullish. This really quick. Hang tight here. Gonna put together a gamma map really quick. I'm long on 740 for today. I have longs for Monday, and then I've got longs for end of July as well. The longs for Monday are for trying to trade 748. I'll show it to you here in a minute. It's like 748, 750. I'll show you what the target is and where and the print and all that. Just trying to put these numbers in here. 7,600. I'm going to show you some of this stuff that I drew in here. Then we'll switch back and I'll draw you the path. It's the easiest way to do this. Wish I could do like a split screen. Maybe I can do this by snipping it, maybe? Let's try it this way, see if this does a better job of... Let's go above really quick, top right. So this is net gamma right now. And we're trading 7411. We're trading right in here. This is 7,400. We've got a minor hiccup here. This is the larger put wall. This is the one they're trying to sell, is this one down here. This is all good to see. It's all nice and supportive. This one right here. I've got this marked out, and I've got this one marked out. It is fascinating to see 8,000 up here. That doesn't shock me. If we start squeezing and melting up, it could be violence to the upside, like 10% or something. So like if we do that trade, it would be monster. But then it brings up the other question of, do we then sweep? Do we then like sweep all the way down here, clean all this stuff up? You know, this is I'm going to bet that this is what it looked like in like 96, 97, 98. Pretty much this gamma map. We don't have that data right now, or we don't have that data at all. But I bet you it looks very similar. The reason I'm showing you this right now at this moment is because I drew on this map. This is net gamma here. And I think the important part of this is that this is all empty down, or not empty, but it's, you know, we lose this. This is your hourly, your half hour, and your daily. If we were to, theoretically, if we lose this on that high tick up here, it's somewhere up here. Hold on, let me just check. So you're talking about something up in here by, let's call it Wednesday, 9:30. That's Warsh. I think, is that right? Yeah, he's right here, 9:30 in the morning. So like squeezing up. Hang tighter, guys. Like a cat at my feet, whipping its tail out, or like licking my ankle with her tail. I just want to know what that was. So like, even if we're gonna sell off up here and start tagging all this stuff down below, I think what you need to know is this part right here. You know, if you're a bull, you can't give this up. You can come down here. This is fine. You know, like this is all fine in here, but if you start seeing this get lost, like if you see a rejection up here, if they try to come in earlier or anything like that, they try to come in here to send this thing down. And you start losing this with like 2 lows down here, just that enough is kind of enough for me. If you get there, you're selling. Like worst triggers this into 4th of July or anything like that. It's like, fuck it, we're going down. That's really what we have to watch for. Now on short dated stuff. So on 0 dates, the magnet here is 7370. So there's like a magnet down here. And now remember, gamma's a funky thing, right? Gamma's like, it's like everything equal in gamma, or in gamma when you're in negative gamma. All else equal, this move is just as good as this move right here. Even though we're being sucked down into this with negative gamma on the day, the intent is they're trying to keep this from squeezing, right? They're trying to rein this in to drag this thing down. But just be aware of it that there is a drag at 7370. I want to call it drag, pin. It's like a magnet. The farther away we get from it, it wants to pull us back down. I'm going to get rid of this one right here for now. And then we got some funky shit going on here for, let's redraw this out. Hold on. Where's Tuesday? There's Tuesday. There's Wednesday. 30. There's Thursday. 9:30. And we have 7:40. I'm giving you this is the map for, where's Tuesday? They get 7,500 as the upside pin right here for Tuesday. Zero date. So we have a 0 date pin here that's dragging us, but we also have a 1 date gamma that's dragging us up into Tuesday for 7,500. And then on 2 dates, 7320. Now, this doesn't mean we trade here. Just I want to give you like the gamma layout. Gamma can change. This is third. Yeah, this is, wait a minute. Just make sure I get this right. So that's Wednesday to Thursday all the way down here. This is Wednesday. Got a pin down here. And then on 3 dates, it's really funky on 3 dates. There's like a pin right here, 7325. That's really wonky right here, but it's literally right here. Hold on here. There's like a pin right here. Now, what's funky about this, it's at 725. Now, what's funky about this pin here is, let me just show it to you guys. This is where the funkiness comes in on this close on Thursday. Now, this is the Thursday gamma, and it's all over the place. There's like if we trade down here because of Warsh, there's the pin for the close on the last day of this week. Fascinatingly, too, there's also 7,400, which kind of locks us in on Thursday. Max Pain is higher. It's at 7,485. And there's also this target up here of 7,600. So the way to read this is difficult. It's not an easy read. Hold on here. So that's USJPY. So the idea here is that we got this dragging us down, pulling us up, right? And then we come into this like Kevin Warsh thing in the morning. They're going to want to sell the open, it looks like. Or we hit this thing early on Wednesday, and then everybody starts hedging, or excuse me, Tuesday, and then everybody starts hedging. And that's where like the hedging stops us from getting above. You get the unrealized volatility of Kevin Warsh telling you everything is awful, everything is terrible, stock market's going to crash. Or you get the realized volatility would be thereafter, right? But this unrealized volatility is a big thing to deal with. And if this thing pulls us down, if Warsh comes out and does anything really, truly negative in that speech, and then we get dragged and sucked down here, and, you know, Warsh is like, expect some, I don't know, I might raise rates in July or some shit like that. That could be where we get set off to go down lower over the 3-day weekend to the downside and close all this stuff up over here. And we have to be careful of this. The trap is there. You can see it. It's like right here, and then you come down here. You put the new low in, and as soon as you put that new low in, when you wake up on Monday back from the holiday, that's where the panic sets in. Because you got the new low over here on the left. And this, of course, would trigger. There's your low right here. This is the setup. Then you come back on the third, and all of a sudden it's, you know, starts selling, right? New flows start selling into month end, pull it out, get rid of it all, start trading like 7,000s, 6,900, all that kind of stuff. So the setup is there. The options market is positioned for it as well. So just be aware that it is set for that. So we'll leave this right here. This is the rest of this week. I would say that the key thing to know here is, are we doing a high enough look above? Is Warsh not as, you know, bared up as you think on his speech and shit? And he's like, no, we're going to run it out hot. Everything's happening. It's the same kind of similar speech that he did at the last rate meeting. And then we go higher. The only other thing I would say on this is, in 96, we didn't do the rate hike. Rates remained steady, and we still sold, and that did mark the high. And this does coincide with all this stuff. So I'm kind of looking for, like, you know, up and then up, and that 7,600 is up here. So I do want to put this up here, this 7,600. And if you're a bull, what do you want to see? You want to see this thing get smashed, right? And you kind of want to see this get smashed in here into the weekend. And you want this hourly trigger coming up so that when you come back on the 3rd, you're like coming in back from the holiday here. Now, if you're here in the holiday, like coming back from the holiday, this should trigger that new month flows to go long.
In response to France's President Macron on Hormuz says,
So just be very aware of, like, what is the price action this week? Now, are we ending in here? And are we going to be trying to sell this next week? Or are we going higher and squeezing And then we're trying to buy back tests, right? 1, 2 above the hourly trigger. And this is your first one above the hourly trigger. We're here. Another one right here. Even if this thing bombs down here, there's your hourly trigger back up. And then we're up and out of here. And we're going to start squeezing and run the 97 trade or run a 98 trade where we go up. I don't fucking know, all-time highs, 8,000.
France not to complicate it further with its provocations.
And where's that 8,000? It's right here. You can see it. It's glaring. It's glaring. It's sitting there. You know, that thing right there could be, that shit could happen by like OPEX of July. Or at least historically it could be. If we're running the same shit from the 90s. Go back and look at this. Yo, sorry, hold on. Apologize. If you want to take a picture of this, don't take a picture of that. Maybe you should, because this gives you the two paths. I know it looks terrible, but here, I'll try to redraw that. Should look like this. Sorry, that's your hourly trigger right there. Right? And a bull wants to see price action that looks like this. Over that holiday weekend up here. That's what they want to see. Come back on the 3rd and buy this, and then we're out of here, right? Fairly easy to see. Right? Not so bad. Okay, cool. We're past all that. We're out of here, right? If not, not that one either. Try to keep this clean, but what you don't want to see is, you know, we're coming into Warsh and we start collapsing into the fucking into the 3rd or whatever. We're winding up over here, and I'm not so concerned with, you don't have to sell if we're down here. You don't have to actually sell this. You can wait till we get back, because what that would look like would be you'd come back on the 3rd and it would be something like this. Like, if they park it down here, you'd come back on the 3rd, they would dump it. But you come back on that Monday, they would give you the Monday high up here, and you would sell that Monday high or that Tuesday high. So you have time to actually sell this market for July. Does that make any sense? You could, I guess, sell this if you wanted to, but you're likely going to come right back on Monday. You're going to deal with the theta burn and then have to fucking sell this thing again. And we're not there yet either, so there's like nothing really to do here. So there's your actual gamma map into Friday. I want you to be very aware here. Like, so couple things here. 4th of July is coming up. I'm going to see, I have to do a business meeting with Joe. You guys know Joe Donut? I got to go see him. We're starting this night show. I got to go see him in Atlanta on Wednesday. I get back on Sunday, I think, in the morning. Something like that. I don't know what my flight is, but just note that people are going on vacation, and the market is going to become very light as we get by Wednesday. If it's light right now, but it's going to get very, very light like Wednesday. So when you see this price action that I'm showing you right now, if you see us, the stream will be up this week into Friday, but if you see us, and you'll see updates from me and briefs and all that kind of stuff, and but I want you to know that if you see like price action down here on fucking, Thursday close, that's not what you want to see. If you're a bull, you do not want to see that price action. If it was me, I would try to sell you down over the weekend over here. I would hammer you down as hard as I fucking could, and I would run that fucking trade against you, and you wake up a blood fucking red on Monday the 6th, I think. So just be aware of that shit over here, okay? That there's a setup in here. If we wake up or we leave on Friday and we're up here, something like this on Friday, we just come back and we're going to buy a dip on Monday morning. It's really easy. Not Monday morning, probably like Tuesday or Wednesday. It would look something more like this. Should I just draw this shit out? 'Cause I drew this one out. I'll draw this is the contra trade I'm going to draw for you now. You're up here with a look above, actually. You'll get the downstroke over here, and then you would crank up into this bell up here. You need to crank this bell right there. This is the contra trade. And then you come back on Monday, it would be something like this. Like there's a, no, so the Monday high, there's the Monday high right there. Let's call this 1600. This looks really wonky here, but it's because they're not showing the dates. You know, that's the contra trade right there. They pushed this thing up over the weekend. It's something like that. And then I think it's something like this. You just want to be up here. If you want to know if I have a bias on this stuff, I think I do have a bias on this. I think I'm neutral on it. Like I think it's a more matter of I want to see the failure up there. I have the bias of the failure up there, and then I want to see if the dip is bought. That's about as far as I go with it. I am long the market. I'm not in this like sell the market thing for the month of July, crash the market stuff. But if we did reject that, we didn't buy that fucking dip. Warsh comes out, and I don't care what he says, actually. I care more what the price action is when he says it. I'm assuming we're going to be up there when he starts speaking. Up at that 7460, 7500, somewhere in that zone. And you're likely going to get some kind of a knee-jerk downside on his speech. Now, if you don't see the knee-jerk downside, we start going up. We're buying dips from that point, and we're off and running. It's that simple. Squeezing higher now. See if we can get some more ramping action at 130. I'm not bearish on this 130. I'm bullish into the bell. I also think tomorrow is going to be a trend day to the upside. So make sure you're prepared for that. Tomorrow should be an upside prepared, not a down, not terrible, or not, what do they call it? Throw up the, no, Tuesday is, I forget what it's called, the meme for it, but I do think we trend up tomorrow. And we hedge from that zone above there for Warsh. Move that out of the way. Just back here. Still haven't touched this one yet. Just note that bullish and trend day tomorrow. Up. Yes. Up from here into the bell, up to all day long, or until we hit that number up there, that 740, whatever it's called, 7460, 7500. Wait a minute, I'll move this one out of the way so you can see it. Sorry about that. Thought we had already passed it. Still long 0 dates. I probably should have rolled them into tomorrow 1 dates, but maybe I'll just add some more. Maybe I can roll them now. Hold on, because I'm green right now. Hold on. I'm gonna try to roll them to 1 dates if we hit this thing right here. Excuse me. It's like watching fucking Paint Pale. My wife just asked me how's it going. I said it's like watching fucking Paint Pale. We're literally gonna like the move is gonna be explosive when it happens. Otherwise, we're just gonna dick around. All right. Where? Hang tight, guys. Give me 1 second here, guys. I got my oldest daughter is driving across the country right now, and she's having issues with her vehicle. I was getting a quick phone call. I'm going to make this phone call, but I want you to know that I'm going to roll into calls for tomorrow if we hit this number right here on a pullback. I'm on zeros right now. I just want to get out of them, and then I'm gonna roll this out into tomorrow close.
NVIDIA say Anthropic's Claude models now available on NVIDIA GB300 Blackwell Ultra in Azure.
You want to hear my daughter? Come on, hit it. Just hit this fucking thing. Oh. She's not answering. Still have not hit this one. Move all that over. 2 to 230. Golden nugget. There. These are the two targets here in the day, the 2 4s. She didn't answer my call. Can you ask your grandmother to call me? I gotta get out of this fucking trade. They're fucking giving me pennies in this shit. There are a couple targets higher than this slightly. This high right here is kind of messy. I can call her too. What did the text message say? Oh, there she goes. Give me 1 second here, guys. Hello? Can you hear me? I'm on the show right now. I got you by this microphone. Where are you at in the US?
Nebraska.
You're in Nebraska?
Nebraska.
Did you see any corn-fed boys out there yet, or no?
Mostly just lots of cow manure.
Are they planting corn? If I read Reddit, they tell me that no one's growing corn because it's too expensive. Is it just empty fields everywhere?
I haven't seen any corn, but there was a couple of plants. I've mostly been seeing just ranch, so like lots of cows.
You're not in corn yet. Okay.
Hence the cow manure.
How was the ranch?
It was really fun. We only stayed at the ranch for like a couple hours. And then we went to
The family reunion
yeah.
at the campground.
Yeah. It sucks because every time
Hey, you're swearing on my show. Are you swearing on my shower? I think I can hear you.
I said it sucked that every time I took a shower, the water was cold.
It's always cold. There's no hot water there. It's like hot water at like 6 a.m.
Everybody else got hot showers, and I got warm water.
I took a cold shower yesterday. I had a sunstroke.
And I was like, I can't win.
So did you say the electric's going out in the car or something? We'll see if there's a mechanic here that can listen to this and see if this helps. So you're in the middle of nowhere. There's no place to pull over to check the car?
Yeah.
Okay, so did you say you're losing the lights or something?
Seeing here, Bergam says gas
so
can absolutely
this
get
morning
back
when we
below
started the
$3
car, only
a
the
gallon. So again, U.S. Interior Secretary Bergam speaking on Fox News. Here.
like anti-slid light was on, and now nothing's on.
Okay. Mommy said that you